So does everybody see the Apple Computer Incorporated chart in front of them on their screen? Okay, excellent. Last week we talked about type 1 trade, which let me go ahead and do a little bit of review and let everybody know that type 1 trade is where we're looking to get in after this Elliott Wave 4 shown here about early June and ride out Wave 5. So we would have established a long position here at Wave 4 and stayed long throughout Wave 5, taking profits whenever applicable. Now conversely to that, type 2 trade is looking for a change in trend after Wave 5 is established. So in this Apple Computer chart here, we would be looking to short this market in anticipation of a change in trend. Now just like our type 1 trade setup, we had a set of rules that we went by. And I'm going to go ahead and lay out the rules for the type 2 trade here as well. The first rule is going to be that we have established an Elliott Wave 5. So we have an Elliott Wave 5 in place. The second rule is going to deal with the Elliott oscillator that you see down there at the bottom, which again is just the difference between two moving averages. In this case, a 5-period moving average and a 35-period moving average. And what we're looking for here is divergence in the oscillator. Now what do I mean by divergence in the oscillator? You can see during this Wave 3 that we had in late April and early May, we created a very large upward movement in our Elliott oscillator. And during Wave 5, we're making new highs in price, but we're doing it with less strength, as shown by the oscillator. The oscillator peak for Wave 5 is much smaller than the peak for Wave 3. We call this the divergence in the oscillator. So with the Elliott Wave 5, we're looking to make new highs in price, as we've done here in Apple Computer. And we're looking for divergence in the oscillator, a smaller peak during Wave 5 than we had during Wave 3. Now this Elliott Wave 5 we'd like to see near a price projection. We're going to talk about the mob here in a little bit. I'll go ahead and talk about it in terms of a Fibonacci extension here for the gentleman who was asking the questions. And I'll go ahead, and we talked about last week, we anticipate Wave 5 to come in at about 0.618 to 1 of the Wave 3 that we had. So you'll see here that Wave 5 came up and poked a little bit beyond that 62% extension, which is about where we expect the Wave 5 to terminate. So we have a good Elliott Wave 5 near a price projection, and we have divergence in our Elliott oscillator. And all we're looking for now is a time to trigger ourselves into this market. We'll go ahead and do what we did last week and select in the upper right-hand corner the Regression Trend Channels tool. I'll left-click on the button, come down to Wave 4, and make my first mouse click on the bar for Wave 4. The second mouse click being on the bar for Wave 5. Now, as a review from last week, you'll notice down here next to our Wave 4 a value of 0.891 shown there. That is the Pearson's R value. That's automatically calculated by the regression trend channels. And in order to use the regression trend channels, which would indicate a linear trend, we want to have that Pearson's R value be above 0.90. So in this case, our Pearson's R value is too low. So what we need to do then is use a triggering tool that moves more fluidly with the market movement that we see during this Wave 5. This regression trend channel is a straight line, and our trend here during Wave 5 has not been straight. So I'm going to go ahead and right-click on the regression trend channel and select Remove. And I'm going to use what we refer to as the 6-4 displaced moving average. I'm going to go down to the moving average button, which brings up a default 20-0 close moving average. So I'm going to highlight and select the Edit button, and I'm going to change this moving average to have a length of 6 an offset of 4, and a source of low. And I'll increase the thickness so you can see it better and change the color to red. So the length means it's using the last 6 bars to calculate the current data. And the offset set to 4 means that we're taking that moving average and moving it to the right 4 bars. And when I put that on the chart, it looks like this. And you see that the moving average extends out 4 spaces to the right. This gives us kind of a leading indicator, which we're waiting for the bars to cross in order to trigger us into this market. So what we'd be looking for here in Apple Computer is for a bar to close below this moving average, and then for a bar after that to take out the low of that bar that crossed it. As soon as that happens, we would be triggered into a short position in Apple Computer in an Elliott Type 2 trade. Now I need to talk about the differences between the Type 1 and the Type 2 here for a moment. You have a higher probability of a Type 1 trade working out the first time than you do a Type 2 trade. So a Type 2 trade carries more risk than a Type 1 trade. However, the payoff in a Type 2 trade is usually greater because you have a better potential of catching the wave 3 and the new trend in the downward direction. Do we have any questions thus far on the Type 2 trade? The moving average was a length of 6. I'll go ahead and bring the properties up here again. Length of 6, the offset is 4, and the source that we're using in a selling situation is the low. If you're looking to use this in a long situation to trigger a long position, the source would be high. That's correct. We had a Pearson's R value of below 90%. I'll go ahead and put that up there again so that everybody can see that. It was close. It was 89.1%, but I'm teaching by the book here, so I'm going to let you know that it needs to be 90 or greater. That's correct. I would go ahead and use that regression trend channel, and we'd be using the lower red line for that to trigger us into the market. So this is the Elliott Type 2 trade. Any questions on the Type 2? That's correct. We have a small 5 at the wave 3. Those are reserved more for those who, like I was talking about before, are very concerned about detailed Elliott counts. What they are is really a count within a count, so to speak. If you break this down on a smaller time frame, say go to a 60-minute or a 15-minute chart, these would be your major wave counts on those smaller time frames. That's correct. Well, you would be using the larger wave count. You would just be viewing it on a smaller time frame, which would wind up being what you're seeing here in the larger time frame. Okay, I'm going to go back. Yes, go ahead. Okay, go up here to your regression trend channel button if you don't see the Pearson's R there, and right-click on the regression trend channels button. In the bottom, you'll see the selection for Pearson's R. Go ahead and turn that to the on position, and then go down to the defaults button just to the right of that and select Save Current Settings as Default. And that'll set it to always draw the Pearson's R value for you. Okay, you're running the real-time version. Okay. Yeah, you go to your Regression Trend Channels button on the Line Tools toolbar and right-click on it. Okay, I'll stick with you after we're done here, and I'll answer that for you when we're done. Okay, I'm going to switch back to the chart that we were viewing last week, which was the ZRAN chart. Let me go ahead and load up my page here. Here's what we were looking at last week. And let's count, let's see, 1, 2, 3, 4, 5, 6, 7 bars earlier. And you'll notice that we've made a wave 5 after our type 1 trade, which was back here. We made our wave 5 and actually have exceeded our price projection here, indicated by our first mob that we ran into. I'm going to talk a little bit more in detail about the mob today and show you a larger mob that we see up here at the top. And I'll show you where I actually got that here in just a moment. I want to answer a couple questions about the mob first. It's generally asked, why is this mob up here at the top longer and thicker than the mob that we have here underneath it? And that has to do with the weight of the pivot from which the mob was taken. So let me back up here and talk about pivots for a moment. Go ahead and remove the tools that are on here now. And here's just a blank bar chart. I'm going to go ahead and select the pivots study from the toolbar here. And you'll notice in the list where it says pivot types, so we have primary, major, intermediate, and minor. When I apply that to the chart, you'll notice letters establishing themselves near the pivot points on the bar chart. A P stands for a primary pivot, a J stands for a major pivot, the I is an intermediate pivot, and the M is a minor pivot. Now these have to do with the significance or the weight of the pivot for which they're marking. For instance, this P pivot back here on 4th of May in 2002 has a great number of bars to the left and to the right that did not exceed the high established on that date. A major pivot down here signified by the J still has a good number of bars to the left and right that don't exceed its high, but not as many as a primary pivot. It's a lesser weighted pivot because it has less bars that do not exceed its extreme. And again, the intermediate pivot is the next lower rank, and the minor pivot is the lowest rank pivot. So again, the pivots have to do with the number of bars to the left and right that do not exceed its extreme high or low. When we're talking about the mob, a mob taken from a primary pivot is going to be thicker and longer than a mob taken from an intermediate pivot. I'll demonstrate that right now. I'm going to select the mob tool, come over here to this previous primary pivot, and apply the mob. And you'll notice that I have about a $2 range for the thickness of that mob. If I take a mob from this intermediate pivot, I have a much smaller mob projection. So when we're looking at a chart like this, a ZRAN daily chart, this thicker mob we know was taken from a more significant pivot than this smaller mob back here. And in actuality, I got this mob from the weekly chart of ZRAN. If I go ahead and go to a weekly chart, I got this mob from this pivot right back here. If I turn the pivots on, turn the Elliott off, you'll see there's a major pivot. And this smaller mob right here was taken from this small pivot here that's not even labeled as a minor. So that's why it has a very small mob placed there, and the mob taken from this higher weighted pivot is much thicker. Any basic questions on the mob so far? Exactly. That's exactly right. And that correlates directly with just support and resistance in general when talking about technical analysis. Yes, the question was, the larger mob signifies or correlates with heavier resistance or support than a smaller mob. That's correct. That's correct. To apply the mob, you only need to click once. If I remove that mob and I want to redraw it again, I just select the mob tool and left click once on this extreme high, and that places the mob. That's correct. Anywhere on the bar is just fine. Any questions on pivots? Okay. Any questions? Yes? Yes, we're looking for a place to go short, but we're going to talk about that in just a moment as to why or why not this is a good type 2 trade to look at. Let's go ahead and do that now. I'll go ahead and erase some things off of here so it makes it a little easier to see. Incidentally, I'm going to leave my email address up here. If you have any questions afterwards that we don't get to, or you'd like information on where you can get any other educational materials, you're always free to shoot me an email here at nate@advancedget.com. Now we're going to go ahead and look at this chart and see if it fits the model for a potential type 2 sell. Our first rule of an Elliott type 2 trading opportunity was that we had a wave 5 near a price projection. Now we've established this first mob as our initial resistance, and we went right through that. So we've exceeded our price projection for this Elliott wave 5. Now our second rule for a type 2 trade was oscillator divergence. We want to have a smaller peak during wave 5 than we had during wave 3. Now is that the case in this chart? No, which is very interesting. The oscillator is going to be your early warning indicator. And I was hoping this would happen before we had our session today, but I'm anticipating this happening here in the next couple of days. Whenever you see an instance where you have an Elliott wave 5 marked on your bar chart, and the oscillator during wave 5 has exceeded the peak during wave 3, that is an early warning indication that this wave 5 could recount as just an extension of wave 3. And we'd see this 5 change to a 3, which if we're long from our type 1 trading opportunity that we had last week, that's a very good thing. It means that wave 3 could continue to extend on up. So this is not a good example here of a type 2 trade setup. We don't anticipate a change in trend at this point in this chart. Is that clear to everybody? Do I need to go over that again? That's correct. In order to anticipate a change in trend, we want to see divergence in that oscillator. We want a much smaller peak during wave 5 than we had during wave 3. What that in a sense is showing is the impending strength of the current trend. We're saying here that the current trend during wave 5 has matched or exceeded the strength during wave 3, which was able to take the market and make much higher highs. Yes, this is a daily chart right here. Yes. Correct. Yeah, you'll see different wave counts. You will always see different wave counts in different markets. Yeah, not all markets will show the same wave count. This is just a stock. ZRAN is the symbol. Yeah, this isn't the market overall. This is a specific stock. Yeah, you'll see different wave counts on different symbols and different wave counts on different time frames as well. Perhaps in a future session we'll go over time frame convergence with Elliott waves as well. Do we have any other questions on either type 2 trades, the pivots, or the mob so far? Okay, I'm going to go ahead and move on then, and I'm going to take these mobs off of the chart. And we're going to talk about the ellipse. Yes, sir, what's your question? That's correct. Well, in this case right here with the mob that we're showing here, we're looking at this mob as broken. We have bars that are completely above the mob projection. So we're anticipating that to mean that this market has great strength and is going to continue on up. If this market were to turn around, say the last 3 bars that are showing here were going in the down direction instead of in the up direction, this mob would have signified our resistance to the upside, and we would anticipate the change in trend from there. Sure. Okay, I'm going to talk about the ellipse now. Where the mob is a tool that we use to signify an area where we expect a change in trend, the ellipse signifies an area where we expect a continuation in the trend. So ellipse is for continuation, and the mob is for trend termination. Those are 2 very ideal things that we need to remember here. So if you'd like to take some notes, the ellipse is for trend continuation, while the mob is for trend termination. Now go ahead and show that in this chart here. I'm going to go back in training mode to the 6th of June. We established our high in wave 3, and we're anticipating a retracement period here. We would like to know the point in time and price for this retracement period to end for us to continue on to the upside in the current trend. What I'm going to do is select my ellipse tool and click once at the beginning of the current trend and once at the end of the current trend. So I made my first mouse click down here at wave 2. Second mouse click was made up here at wave 3. And what you're seeing on your chart here are actually 2 different ellipses. The yellow ellipse that you see here is the short-term ellipse, and the turquoise ellipse is the normal ellipse. And if anyone's drawing that at home and you only see the turquoise ellipse, I'll show you how to turn on the other ellipse here. Go over to the ellipse button on your toolbar and click with your right mouse button. Brings up the TJ's Ellipse Properties window, in which you can turn on the short-term ellipse. With the short, normal, and long ellipse, you can think of those in terms of different levels of retracement. Just like when we do a Fibonacci retracement during a wave 4, there's a 38% retracement level, a 50% retracement level, and a 62% retracement level. You can think of the ellipse in the same terms. There's not only Fibonacci calculated into the ellipse. There's other statistical indicators in there as well, but it's easier to think of the short, normal, and long in those terms. Are there any questions on why we have a short, normal, and long term ellipse? Okay. For all intents and purposes for how I use the ellipse, I always have my short and normal turned on. I set that as my default. Again, you have the defaults button that you can select, and you have the Save Current Settings as default that you can select as well, and that'll make it so the short and normal are always on. Yes, it's done in real time the exact same way. You have an ellipse toolbar button there, and you can right-click on that and the same menu should appear. I've drawn the ellipse from 2 to 3, and here's my short-term ellipse and my normal ellipse. And as I add each bar, you're going to see the body of the ellipse move closer to this shadow that it's connected to by the line. The ellipse is not confirmed until the shadow disappears. So as I go ahead and start adding bars, you notice the ellipse and the shadow moving closer to each other. Until finally, right here, it happened on June 16th, the shadow of the ellipse disappeared, and we're left with just the body, signifying that this ellipse is confirmed. And if the short-term ellipse is what's going to hold, we expect the current trend, this overall upward trend, to continue at this point after this retracement. As I add more bars in, we see that that ellipse held and confirmed that that was the right time and price for that trend to continue. So The normal ellipse wasn't the one that caught it. In this case, the short-term ellipse caught it. So I can right-click on that and turn the normal ellipse off since we don't need it. And hit OK. And that's where our ellipse held. Again, the ellipse is for trend continuation. I'll go ahead and advance this until we get to where the market stands today, which is right there. So this ellipse caught the right time and price for this trend to continue to the upside. Are there any questions on that ellipse? Well, if you go back and watch session 1, the trade was entered at the cross of this regression trend channel when we broke the high of this bar on the 18th. Correct. Yeah, the high of this bar was $19.29, so $19.30 was our trigger to enter this trade. Well, there's several different ways that we can do a stop. You can calculate a trailing stop. You can use the same regression trend channel and just follow the trend up and wait for it to break down below the red line. You can set a price objective like I did. If I move over to my weekly chart again, I took my MOB from this pivot back here, and I'm looking for the market to go up and reach this MOB level, so $26 or so. You could have used Fibonacci extension and said that you wanted to take profits once we got inside this range of 0.618 up to 1, which we're in now. So there are many different methods for taking profits, and they all have to do with the style of trading, what fits the personality of the trader. Well, we don't have mechanical trailing stops built into the program. Yeah, it's not going to execute the order for you, but based on whatever you applied to the chart, you could enter that into your trading platform as your stop. Sure. Is there any other questions at this point? On the oscillator? Yeah, we haven't. We've looked at the divergence for the type 2 in this situation. In the type 1, you're not looking for divergence in the oscillator. You're looking for the oscillator to return to 0 during wave 4, which again is covered in session 1. So if you have any questions on the type 1 trade, I would encourage you to go back and watch session 1, and that should answer all your questions there. Okay, are there any questions on anything that we've covered so far today? Sure. Sure, I went to the ellipse button on the toolbar and clicked with my right mouse button. And that brings up the TJ's Ellipse Properties menu. Do you see the same thing in yours? Okay, and you just turn the short-term ellipse on. And then in the lower right-hand corner, you'll have a defaults button. And when you select it, you can select the setting for Save Current Settings as default. Yes, I use the same settings for the ellipse no matter what time frame it is I'm trading. Sure. Any other questions on the ellipse? Okay, well that went faster than I had anticipated. That was the content that I had that I definitely wanted to get through today. Does anyone have any questions in general, since we have the time to cover a little bit more? Well, those are the two trades that we start off with showing people. Those are the two that the program was founded on, and they're the easiest to understand. And once people have mastered the Type 1 and the Type 2, we have intermediate and advanced seminars that you can attend that begin talking about some deeper trading strategies. Correct. Well, we do have sessions available on real time as well. We also have regional seminars that we do. What part of the country do you live in, sir? East Coast? Are you near a major city? Okay, well, we go to New York City and Newark several times a year, and we do some shows that show the real time as well, both by itself and used with the advanced GET tools. Also every Thursday, Jay Frank from eSignal does a demonstration for new users of the eSignal real-time program. You can sign up for that at the same location for which you signed up for this seminar. If you want to shoot me an email at my email address here, I can give you the link. That's correct. And I'll give you an email back with the link for where you can sign up for that real-time demonstration. Does anyone else have any questions? Yeah, next week we will talk about the XTL, which is another trading system. And we will also then, once we've gone through all three of the trading systems, the Type 1, the Type 2, and the XTL, we're going to talk about the end-of-day search function that's built into the Advanced GET program that will help you weed through all the thousands of stocks and indexes and futures that we have and help you pull up some of these that are already meeting the criteria for these trades, which incidentally is how I found this ZRAN chart. I was at a seminar in Cleveland and just ran a search while I was doing a demonstration, and this is one of the results that came up, and it's just been something that I've used as a demonstration tool since then. I've been following it since I found it on the search, which was about on the 16th of June, that weekend when we were in Cleveland doing a seminar, and you can see it worked out to be a very nice Type 1 trade. Yes? Well, I'll explain that in terms without talking about Elliott, because you don't necessarily have to have Elliott on the screen in order to determine where to draw a mob. I'm going to back this up in training mode here, and we'll go back to about this area here. I'll erase some other things so you can see this a little better. Okay. We're looking for a continuation of this trend to the upside, and would like to know at what point this will terminate as far as price is concerned. So what I'm going to do to try to determine that is go back to the last pivot that has not yet been overtaken by the market. So we're going up, and we're looking to take out the high of this pivot that we had back on the 2nd of June. So this is going to be the pivot from which I'm going to take my mob projection. It's the last pivot that has not been overtaken by the market. Right, so I'll take the mob and make my one click there, and there's my mob shown right here. And I explained in session 1 the significance of this little black hash on the left-hand side. Now in this case, I'm going to advance the market, and right about here on the 14th of July, we have a bar that is completely outside of the mob, completely broken through the mob. That tells me that we have a pretty good chance of continuing on higher with this market. So the mob from this pivot is not the one that's catching our resistance to the upside. So we need to back up to the next mob that was overtaken by the market. And I could scroll back here on the daily chart and look for it, but I find it easier just to go up to the weekly chart, and we can easily see that this is our last significant pivot back here. And that's where this mob was generated, was from this mob here, or from this pivot here. So this is the previous pivot that's significant in the market. So that's why I took the mob from there. Yes, I'll go ahead and erase this, and I'll redraw it here. I'll draw my mob here from this pivot here on the 6th of December, and there's my mob shown on the weekly chart. And when I bump it down to a daily, the same mob is still up there on the daily. All of your technical analysis translates from time frame to time frame. You can, yes. Yes, you can apply your technical analysis to a higher time frame and trade it on a lower time frame. It's not necessary to do so, but you do get more significant technical analysis oftentimes doing it that way. Absolutely. For day trading the E-minis, I use pretty much nothing but a 517 oscillator. We're using a 535 here. I use a 517 oscillator, which works a little bit better with a smaller time frame, like a 1-minute chart that I trade on, and the ellipse. Essentially the same rules, but being that it's a 1-minute chart, things are moving much faster, so you don't have a whole lot of time to go through such an extensive checklist. So it's basically a simplified Type 1 trading strategy used on a 1-minute E-mini chart using. That's correct. Well, an ABC is just referred to as a corrective phase. A 1, 2, 3, 4, 5 is an impulse phase, which is a longer trend. An ABC is a 3-wave corrective phase. And we do have content recorded going through the Elliott Basics that can answer all those questions for you. Well, Type 1 doesn't refer to being long or short. Type 1 refers to a continuation trade after wave 4. Correct. Yeah. Well, when we talk about a Type 1, it doesn't matter if we're going long or short. The same theory would apply. Let me back this chart up here. All right, this is a chart that's set up for a Type 1 buy or a Type 1 long position. If this were a 1, 2, 3 in the down direction, we would be looking for a Type 1 sell. So it's still a Type 1 trade, whether it be buy or sell. We're just looking to enter the market after wave 4. Okay. All right, are there any other questions? Well, we're going to pick it up again next week. We'll talk about the XTL, both the breakout and the continuation with the XTL strategy, and then we'll put it all together in the search, which will teach you guys how to filter out all of these stocks that are meaningless and find the ones that are lining up to meet the criteria that we're looking for to kind of speed up your time spent looking for trading opportunities. Yeah, it was on eSignalCentral.com, and then you go to the events section, and that will list the online presentations that are available. That's correct. And if anyone would like to review today's session, I should have it posted by tomorrow morning on our eSignalEvents.webex.com. Let me go ahead and type that out on here so everybody can see it. eSignalEvents.webex.com/eSignalTraining. And you can sign up for any of our events right there. You can find it on the exact same page. We don't really have a recorded rate of success of the Type 1 or the Type 2. It's a very difficult thing to ascertain, being that there are so many markets out there, and the research has just never been done on that. I do know that we have some statistical probabilities built into the Type 1 trade dealing with the Wave 4 channels. That was the 80%, the 60%, and the 40% we talked about last week. and that the type 1 trade has a higher probability of working out than it does a type 2 trade. I don't know the exact statistics. I've heard mention of 60% accuracy for type 1. I don't know that that is something that's concrete or that there was actual research done on that. But like we talked about last week with our reward risk, you can maintain a 40% accuracy rate, and if you maintain a 1.6 to 1 reward risk ratio, you can still make money being right only 40% of the time. So your accuracy really has more to do with your money management than it does with the trading system that you're using.